Well, we talked a little bit about Constellation Energy and Meta Platforms announcing a 20-year deal, nuclear energy deal. Now, Constellation shares initially surged. I saw them up about 15% this morning, now down 2%. What's the real story here? Travis Miller, utility and energy sector strategist at Morningstar. Let's talk a little bit about this. The synergies, was this a good deal, and what kind of deals are we going to need in the future? Your thoughts on this particular deal?
Yeah, hi, Nicole. Thanks for having me. So, I think you really made the big statement that this is a huge deal. Now, huge in terms of size, it's not necessarily huge in terms of profitability, huge in terms of the stock, or huge in terms of the industry. What I think is huge, again, is the number of megawatts, or the size, the amount of electricity that Meta is willing to buy from this. To put this in perspective, the nuclear plant, Clinton nuclear plant, about a gigawatt of capacity would be enough to serve about 1 million homes. So this is confirming the fact there's a lot of demand out there for electricity, a lot of demand from the tech companies for electricity, and literally city-sized demand for electricity out there.
That's amazing. So the number of the wattage that they're looking here, and it's only the beginning. It doesn't feel like, this will sort of, it's like almost like a Band-Aid. It feels like in the world of tech and powering AI and all that, right? Are we going to be able to handle this?
Oh, absolutely. The grid has plenty of capacity. There's no reason to believe we are not going to be able to handle that in the U.S. The key distinction we are trying to make is that this is going to happen in only certain areas, because there are areas of the grid. The grid is very regional. It has all different types of components and aspects to it. So the regional state of the grid is really going to determine where these data centers locate, how they buy their power, how often they operate. So we're watching that very, very closely, which regions these data centers and the tech companies decide to locate.
Constellation Energy, a good company, a great company?
Oh, it's a very good company. It's the largest nuclear company in the U.S. It was formerly part of Exelon. It's probably one of the most profitable power producers out there. So absolutely a good company, very well run, has some of the best run metrics in terms of their nuclear operations, and certainly is well positioned for any of these data center contracts or serving nuclear throughout the entire country, particularly in the eastern U.S. But absolutely a good company, well positioned to serve some of these data center contracts. The question is, how profitable are these contracts? That's something we're watching very, very closely. So this is not necessarily a great thing on profitability. It's a great thing in terms of the amount of demand out there. The big question for investors is, how profitable are these contracts and how much do they add to the value of the companies?
Well, a moat or a market share or penetration will help to build profitability theoretically, right? So if all these tech companies keep calling Constellation Energy over the other nuclear power producers, and then they start to have this footprint, this foothold, then maybe it becomes, they can sort of, I don't know, raise prices or brag about the number that are involved, right? But isn't there sort of a power play that could be set up there?
Certainly scale is very important in this industry, in the power production and the retail energy supply industry. That said, there's a lot of competition, and there's a lot of competition from all types of players. There's competition from the trading operations, from banks, from energy companies, from power producers, from other utilities. It's a very, very competitive space right now to serve some of these contracts. So it's not just Constellation that's in the mix here. There are dozens of other operators and power providers and energy providers out there that are competing for these contracts. And they're competing against very sophisticated clients. Meta, Google, Amazon, these are companies that are used to signing and negotiating very, very large, very expensive deals. So it's a super competitive industry. Constellation is not the only one and not the only player. That said, Constellation does have slight advantage in that they have a huge scale across, especially, again, the eastern U.S. relative to some other competitors.
Let's talk about some of the other names. I mean, first of all, what's your rating on Constellation? It's at 313 today. How many stars do you have? Where do you have a fair value price target? There's also, I see Vistra here. I see Nano Nuclear, and also NuScale would go into this, right?
Yeah, a bunch of those nuclear plants and nuclear industry companies would be involved in these kind of potential deals. For the entire power producer industry, when we think about the big ones, Constellation, Talon Energy's in there, Vistra Energy, NRG Energy, those big four publicly traded ones, we're very bearish on them. We think that the market is way overpriced the amount of growth, the timing of that growth, and the profitability of that growth. Most importantly, again, the profitability, you want to hammer that home, that these contracts, as large as they are, might not be nearly as profitable as contracts we've seen in the past and contracts that they have for their existing assets. That goes again for NRG, for Vistra, for Constellation, for Talon, other players in this space as well.
Which ones have 4 or 5 stars in your opinion, Travis?
Yeah, we're bearish on all these. So we think the real opportunity for buying is in the regulated utilities. So again, I talk about competition. Regulated utilities, the old mom and pop, grandma and grandpa stocks, they're also part of the competition for some of these data center contracts. And they have an advantage.
Yeah, which names? Names like what that you do like?
Yeah, right now we like Evergy is one of the stocks we like. Duke Energy, one of the stocks we like. Alliant Energy. So look at the Midwest, mid-cap regulated utilities. We think that they're certainly competing for projects, and in certain ways they have an advantage over some of these power producers and retail energy suppliers like a Constellation or a Vistra Energy. We just think way, way, way too much excitement is priced into those names like Vistra, like NRG.
It's good to have you on and give us that perspective. Thank you so much for your honest perspective and a look at this group. Travis Miller,
Sure.
Utility and Energy Sector Strategist at Morningstar. Thank you.